This video is to be used for educational purposes only and is not intended to replace individual research or licensed investment advice. Unique experiences and past performance does not guarantee future results. Trading stocks, options, and spot currencies involves substantial risk, and there's always the potential for loss. Your trading results may vary. No representations are being made that any software or training will guarantee profits or not result in losses from trading. This is the Premier Trade FOREX report.
This is the FOREX report of the James Dix Financial Network. I'm Jack Lott. We had a wild ride today in the majors as fears of weak economic growth in the U.S. sent the carry trade lower during the European session. With that framework, U.S. traders began their morning. Consolidation started early with investors unwilling to make large bets before economic data pointed the way. It did not take long for that to happen as U.S. pending home sales came in significantly lower than expected at minus 12.2%, increasing the possibility of a rate cut. This was the first release that shows that the post-credit crunch housing numbers and the data suggested buyers are still waiting on the sidelines for prices to decline. There were other events, though, that while not impacting the market directly, we continue to keep our eyes on. The Bank of England offered extra cash to financial institutions, and the European Central Bank said that it is ready to contribute as policymakers sought to shield economies from the highest LIBOR level in 7 years. This is the first time that the Bank of England engaged in a direct attempt to ease liquidity, but most importantly, it shows a coordinated effort between central banks worldwide to ease the credit crunch. Both central banks announce monthly interest rate decisions tomorrow, and both are expected to keep rates unchanged. However, the ECB will release a press statement while the BOE will not. As far as the Fed's beige book is concerned, we saw the dollar gain some quick ground as the information failed to meet traders' expectations. The Federal Reserve found that the effects of the August credit market rout in the broader economy to be limited beyond the housing industry. Outside of real estate, reports that the turmoil in financial markets had affected economic activity during the survey period were limited as economic activity has continued to expand nationwide. This according to the Fed in their beige book released earlier today. Investors were waiting for the other shoe to drop in the form of the beige book, but even the New York district reported moderate expansion, so it seems that traders just blew off that release. With the report out of the way, the next milestone is non-farm payrolls. That's due out on Friday. Until then, we continue to look for a moderate market movement with short-term trades in either direction. And that is the FOREX report. I'm Jack Lott on the James Dix Financial Network.